Hello everyone, Jesse Webb, TradersPro. Market conditions remaining bearish in a bull market. We are seeing a bounce though at these levels. Let's talk about that a little bit more. On the momentum indicator, we had slid back all the way over to the extreme, and these last few days have moved us back up into this, still in a downtrend, but now just off of these extreme levels. So nothing super bullishly exciting right here, but we're at a location where we're starting to see some buying and starting to see a support area that could propel us higher. And so we'll look at a couple of bullish scenarios, a couple of bearish scenarios. The breadth indicator is still deeply oversold and could also bounce from here. That can act as both a bearish and potential bullish idea, because obviously we are in a downtrend and there's lots of stocks to the downside, so the momentum is that direction. On the flip side though, we've got selling starting to dry up, and this three-part counter trend that we have on the S&P 500, where we have this and this, that kind of a counter trend back to a support area, starting to hold within an overall uptrend. That's the birth of new uptrends, or the continuation of new uptrends, and they feel kind of rotten. They feel kind of like you shouldn't be buying into these areas, and that's typically where that new trend will start to begin. We'll look at the S&P here in just a minute. Buy-sell ratio is starting to curl back together now. And again, so we've seen this extreme. We're at an area of extreme that the market just, at least in this last year's time frame, doesn't move quite past. Without, it's not gonna continue to move this direction forever. At some point, it's gonna be as wide as it's going to be, and selling is going to end, and buying is starting to begin. Okay, so is that starting now? This is a typical type pattern. This is a little bit longer than normal, but when you do have multiple type of topping patterns and then they start to come back together again, that's what we ultimately want to see right here. And that also gives us confluence with the sentiment indicator. We've seen it bounce now off of these lows. So we definitely were stretched to the downside and due for at least a reprieve rally. What that looks like on the S&P 500 chart is utilizing SPY, which is the ETF. We've had this uptrend. This is the entire uptrend since May, and we've counter trended it back inside of what's referred to as a retracement or a buy zone, inside that 50% 618 area. If I were to get rid of these two and just leave these two, these are common support areas where you do start to get buying interest inside of this box of this 50% 618 retracement. You can see S&P held up decent on that price point. If we go out to the 1 year and we were to add some of these other levels back in again, 236, 382, we're right in the middle of those. This is the area in the short term that we kind of want to be paying attention to, because we now have this resistance area. If I draw that line across there, you can see that the price has been here, it's been here, it broke here, and now it's retesting this area. So now these areas of support are potentially going to be areas of resistance. So this overhead, this floor, once it's broken, becomes the ceiling back to the upside. So we'll watch to see if we get any kind of close back up above around that 433 level on S&P 500 this week. That would certainly help the bullish scenario. In the short term, though, you can see that we've moved off of the extreme, but we're still in this overall bearish downtrend. So I'd be certainly using caution right here to try and look to go aggressively to the bullish side. There's just not enough confirmation. That said, that is part of what an early entry reversal type strategy is going to be looking like, is looking for the completion of that three-part counter trend, some support, and not a lot of confirmation, but at least some confirmation. You're starting to see a little bit of that. That bar on Friday was kind of ugly, where it gapped higher and then it ended up just trading lower all day long. So you end up with this black bar. If we were to change that setting over and just go to a traditional candlestick, you can see it's a down day, it's a black day, it's a red day, and not a black day, but a red day. But we did have this bottoming we've got kind of, this is where the battle is going to start to begin. We've got this bottoming tail bar hammer, and now you have this bearish piercing pattern. We'll see some volatility inside this zone. If that continues to break down, trend's going to continue lower to that next stop, which is going to be that 416 area, which was about that 382 support level on the 1 year chart. that 416. Some other things to be considering this week. We have gold. Keep an eye on gold because it has just completely gotten pummeled this last 3 or 4 days, and it could be at an area where we're starting to get some support. If we come out here, actually, let me show you oil first. Well, crude oil is really not doing much. It has been topping out. It's had that big run up, and now it may be starting to pull back just a little bit. The other one was bonds, actually. Bonds are one that we want to keep an eye on. So it's been deeply oversold. We want to see bonds start to move higher because that means interest rates will be coming back and moving a little bit lower, and that's what the markets are going to want to see. Something like that, at least some kind of indication that interest rates are going to be pausing or slowing, or even ideally moving lower. That's really a big, massive overhang on the market right here. If we go over to sectors and then look at these sectors ETFs, and we can see that we still are pretty heavily to the downside. Really nothing. A good solid day or two to the upside is going to switch a lot of these sell downtrends back to a hold, kind of that pausing trend. But we're seeing that in energy, which has had this uptrend, and now just pausing that move just a little bit. Pretty big bearish day on energy, which is also kind of we could see this rotation back out of energy, back into tech, back into other stocks. We've seen oil doing well, but this could be an early indication of a little bit more downside on USO. If we also look at the commodities tab here, you can see this oil fund. It's really the only one that's in this buy up trend. It's had a day or two of pullback, but a nice uptrend. So it's not showing really anything super bearish at this point, but it is something to be aware of at this point in the market. If we look at the Dow, the indices on the Dow, we've been watching this one here, Dow at 3 and 18. So we still have 18 to the downside. Only 3 stocks in that uptrend. So 2 oil stocks and a healthcare stock. That tells you a lot right there. We also don't have, it takes some time for those to move from sell back up to hold and then back up to buy. So it's going to be a little bit slower, choppy next few weeks to be aware of. Some of the muscle stocks groups to be aware to be watching. Nothing real compelling here. There are a couple that we'll get a little deeper in the list. SMCI has had a big run. It's been retraced. It went from essentially from 100 to 300, almost 400, just a massive run in the last year, almost 400%. And so now it's counter trended and just giving a little bit of an inkling here of a new uptrend. And keep an eye on that one because it is a big mover. And in that storage sector, which, really anything in that area has been moving pretty well. Also, if we take a look at, actually, let me refresh this so we get these current new buys. SMCI, NGL, which is an oil stock. This one also keep an eye on because it's another high flyer. It's up 219% and pulled back significantly. And in that oil refining sector, with a pullback could be an opportunity there. TDUP, really sharp move off the bottom and then moving higher. Sometimes these will retrace a little bit back into, the hold range as they're looking for support, but not a bad looking pattern on a $4 consumer product stock. Meta made the group, not a great looking pattern, but Meta has been trending higher, pretty decent looking bottoming tail bar, up in the momentum zone still. We'll see if that bearish bar holds and we get any momentum to the upside this week. Let's go through just a couple others here. This actually was one of the better looking patterns that I like. It's early in the buy zone. It bounced off of the momentum floor right here, around that $40 range, some support, and it continued to maintain that, and now it's working on this overall uptrend. BR is a decent one to consider for today. That'll do it for today's update. Everyone have a fantastic day today.